But what do we want to do to actually start? Just introduce ourselves.
We should have this as the start.
Okay.
The whole thing.
Just this whole thing. That's fine by me.
No, we should just
Okay.
say,
Look, everybody.
hey.
Hello. We're starting. This is it. This is the beginning, and that's that. This is where we're starting right now because that's enough talk.
Sounds good. Let's do this.
So, welcome to the very first Ardent TV video. This is Joseph Accardi, principal broker of Ardent Mortgages, and I'm here with Thomas Traplin.
I'm the marketing manager at Ardent Mortgages.
And this is our very, very first video that we're putting together.
Yeah, we definitely didn't record this multiple times before this. This is number one take. We've never done this before. We're going to talk about the 5 bad reasons to refinance your mortgage.
And we're going to continue to release new video content as frequently as possible. But today, and I want to, let's do this, 5, right on the bottom there, the 5 bad reasons. We're going to put that in there.
Yeah.
All right. So you're going to ask me some questions, I take it.
Yeah, so we're going to go over some really bad reasons you might be considering your refinance. So reason number 1, you want to save some money, but you might be moving soon. Why is this a bad reason?
So there are transactional costs with moving, right? You have land transfer tax, you have realtor fees, unless you're planning on doing a private sale, which has its own set of issues. So, and I want to state, with all of these reasons, there's always exceptions to the reasons, right?
Of course.
But as a whole thought, to refinance and then sell and obtain financing again, you're paying legal fees for the transaction, for the refinance. You're paying lender fees, broker fees, and then when you complete the transaction for the sale, you're paying realtor fees, legal fees, and then all the transactional costs again for the purchase, right? So that's not, you're throwing money out the window. That being said, there's always exceptions to this, and the exceptions in this case would be, let's just say that right now you're on the cusp of qualifying for what's considered traditional A lending. If you can clean up some credit, and if the cost makes sense to rebuild your credit, and you can bump yourself up into that next qualifying bracket, and you're saving yourself X dollars over the next 5 years, and that cost, you do the cost savings analysis on it, and you're saving more in the long run, then of course it does make sense. But you have to look at the total cost involved on it.
So let's go to reason number 2 then. So why is it bad if you want to make some renovations on your house? Why would this be a bad reason to refinance?
Again, as with all of these reasons, renovations isn't a bad thing to do to the home.
It's the particular renovations you're going to be making, I think.
That's the thing. You have to look at, again, the numbers won't lie in these situations. Same with item number 1. If you look at the cost to doing a renovation on a property, you want to make sure that you're adding at least that much value back into the property for it to make sense, and include the transactional costs as well. As long as you're netting out positive, it does make sense. But the trouble is that most typical renovations don't actually add much value or the same amount of value back to your home. So now you're drawing equity from your home only to come out flush or worse on the refinance. So it doesn't make a lot of sense to do that. Now, Again, exceptions to this. Sometimes you have maintenance that you can't afford. If you need to redo your roof, if you have damage to the property, and you have no other means to protect your home and protect that asset, then sometimes you have no other choice but to tap into the equity of your home to do those renovations. Does it make sense? Situational.
That's some good advice. So let's go to reason number 3. You want an easy out from your credit card debt. So this one seems interesting, right?
I like the way it's phrased,
too. Of course.
Easy out.
You want an easy out.
Yeah.
Well, it sounds like, who doesn't want out from a credit card debt? Why is this a bad reason?
It's funny that this is an item in here, because a lot of what I've done in the past and a lot of what I'm still doing right now is debt consolidation loans for clients. And again, you have to have a clear path in mind. If you are just drawing equity from your home to pay out debts and you haven't learned about credit, you haven't learned about what you're going to do and you don't have a plan to move forward, you're going to fall into the same habits. And I see this all the time. I see this all the time with clients, even the clients that I've hit over the head with a hammer, not literally, of course, about not
the figurative hand,
not dipping back into their credit and debt. And, here's what happens. You have $50,000 worth of credit card debt or payday loans or other items like that. You consolidate them into your mortgage. And what's the next thing you're going to do? You're going to go rack up your credit card debt again. Well, you're just going to put yourself further and further behind. And the banks see this and they say, your home is not an ATM. That's not what it's for. So again, everything situational. If you're going to be consolidating debt, make sure you have a plan to move yourself back to the bank. Make sure you've consolidated everything so that you can have some cash flow and eventually move back to the bank, and you're fixing your credit. That's the biggest thing.
Yeah, you have to deal with the bad habits that got you there in the first place before you.
That's exactly
take this
it.
up. Why do you want to increase the risk of your house?
That's right.
You're just taking on more debt, and now your house is even more vulnerable than it was before.
Mm-hmm.
So let's go to reason number 4. This is a reason that I like. You want to take a vacation. Why is this a bad reason? Who doesn't want to take a vacation?
So it again boils back down to what is the equity of your home for? What are you going to be using it for? Is it a purpose? Is it a bank? Is it a situation where you want to draw money from bank of your house to finance anything else that you need? We've gotten into some really bad habits in the last little while with the housing market just exploding. 30% increase in value. It's very easy for you to say, oh, I can borrow from the bank at X%, or I can increase my mortgage for this. But that's short-term thinking. These 30% increases are not going to, we see it right now, they're not going to be persistent.
It's not going to last forever.
Yeah, exactly.
They can't.
Exactly. So when you're looking at things like taking a vacation or any other purchases that are fairly large purchases, the best course of action for it that I can recommend to anyone, rather than drawing from the equity of your home, put together a savings plan. This is something that's really overlooked right now, especially in our generations and the new home buyers right now. People are not setting aside enough in the way of savings to plan for vacations and other items like that. If you want to go on a vacation, consolidate your debts, clean up your credit, and set up a savings account and start setting X dollars aside per month until you hit that target so you can afford to go on your vacation. And you will enjoy that vacation a lot more because you will have earned it.
Absolutely, absolutely. You also have to factor in the real cost of what you're doing, right?
Same story as the previous items.
Pretty much.
The costs are still there, right?
But you have to understand what it's actually going to cost you in the long run, not just the upfront, the price tag that you're looking at right now, especially when it comes to like something like a vacation. If you're going to say, I could take a $5,000 cruise.
Yep.
That cruise is not going to be $5,000 once you factor in the interest and the payments that you're making over time. You could be looking down considerably more. And is it still worth it at $7,000, $8,000, $9,000, right? Depending on how long you're going to be paying it off and whether or not you're going to be adding to your debts. And
that's right.
You can just go downhill from there. But you have to keep that in mind when you're considering what you're going to use your money for, and especially when you're going to put it against your house. So let's go into reason number 5.
The last reason. We made it through the video.
The best worst reason to refinance your mortgages. You want to buy a car.
And this is effectively exactly the same as reason number 4. All of these reasons have exceptions, except for maybe number 4. Unless it's a required vacation that you have to go on. But we're talking about the car right now. The only scenario where I've ever helped a client refinance their home to buy a car was a very specific situation. Client was going to lose their job because they had to commute from St. Thomas to I think it was Woodstock. This is 4 or 5 years ago, and they got into a car accident and the insurance wasn't covering it. And they needed to draw some equity to get a car because their boss was threatening to terminate their employment, because that was one of the conditions of employment. They needed to have a vehicle to get to work every day.
That's a pretty rough situation.
It is a really rough situation, but it happens. So she didn't have the cash. She was trying to borrow from her parents. She was trying to borrow from all these payday companies, but nobody would give her enough money. So she had equity in her home, and we got her the car.
How much did she pay for the car?
It was a used car. I can't recall exactly, but I would say it was
Small
probably about
dollar
$6,000, something along that. Yeah, I can't recall. If she's listening, I haven't reached out to her since then. I haven't been able to, but she can definitely, if she's interested, comment below and let people know.
But the point is, she didn't go out and buy a $50,000 brand new car.
No, and it was situational, right?
Yeah.
So if you are looking at how much equity you have in your house, and you're from somewhere in the GTA, and you see, oh, you bought your house 10 years ago for $500,000 and now it's worth $1 million, and you're saying, oh, I've always wanted that Tesla. I probably shouldn't name any specific brands, but
that's fine.
I'm going to say Tesla. You've always wanted that.
I want a Tesla. So
you've always wanted that Tesla, and now you have the equity in your home to go out and buy it. Well, think about what you're tapping into to pay for that car. Think about if that's actually in your budget. Think about if that's something that you really realistically are affording, or if you're just lucky because you got a lucky investment on your home and you're gambling with that asset. Let me add one more point to this. You can go out and buy that $100,000 depreciating asset of a vehicle, or you can take that $100,000 out of the equity of your home and reinvest it with a lender, an investment product, something like that. You can even be looking at up to an 8% return or higher. And you can contact us if you're looking for anything about investment opportunities as well. But that's a much smarter investment for
sure. And we're going to get into that in the next video, which is going to be the 5 good reasons to refinance your mortgage.
Well, look at me looking ahead.
So stay tuned for that one. Looks like you've seen the script for the next one.
There's a script?
Sort of. There's a script. All right, well, that's been our video. We really appreciate you guys hanging out with us and listening to our rants and our rambles.
Hopefully we get a little bit cleaner as we keep going along with this, but we're going to keep this as is and post it just like this, I think.
Yeah,
Are you planning on editing it?
No, probably not. Maybe just the end. Right here. This is probably where it's going to stop.
The end.
Mid-sentence.